What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla moving forward, and what's happening with the debt ceiling and the things Joe Biden just said. I'm going to talk about many other tickers out there, from SPY to the QQQ to Nvda and others, and break down the key support and resistance levels, which will be key for tomorrow. Before I break anything down about what's happening with the charts, what's happening with Tesla, and what you should be watching for anticipating tomorrow, I do have to mention a couple of things before starting. Firstly, I am not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any can be a free Tesla share. The offer ends very soon, in just 2 days, so check it out before they run out. With that out of the way, let's get on with the video. Alright guys, today is Memorial Day. Please have a very fantastic rest of the day for today. I hope you're spending time with people you love and you are enjoying the hot sun if you are in a place where it's warm. Please have a great day, everyone. But today I still need to talk about the markets because something very interesting is going on with these key levels and with what Biden just said with the debt ceiling and its interpretations. Now, to start us off, let me just mention that we have earnings coming out. Nothing too significant, just like HP and a couple of other tech ones for Tuesday. U-Haul too. For Wednesday, it's just like a couple of companies. Many of them are Chinese, alongside Nordstrom and Chewy. And then for Thursday, we have Macy's, Dollar General, and finally Dell. That's going to be one of the most important ones for the week. And nothing much coming out for Friday, right? Very short week this week. Nothing too significant from the earnings side. But we do have some very significant data for the trading week in terms of the jobs numbers coming out. For tomorrow, there are no jobs numbers, but we have consumer confidence at around 10 o'clock a.m. Eastern time. So make sure you look out for that time frame at about 10 o'clock a.m. And then 30 minutes after that, too, we have the Fed manufacturing index. During that time frame, during the first hour, expect more volatility because of this data, especially at 10 o'clock. The consumer confidence is coming out. However, between Wednesday and Friday of this week, we have lots of data coming out for employment and unemployment. We have the job openings from the JOLTS and then the job quits. That's very important. We have some Fed speakers and some mortgage data, followed by initial jobless claims, manufacturing data. And finally, for Friday, we have the unemployment rate coming out. That's going to be very important. Why is all this so important? Because all of this data dictates the Fed's policies. The PCE report came out and was a little bit higher than expected, just a tiny bit. That is showing some signs that inflation may start to spike more. We may start to see inflation increasing as the summertime comes. And the Fed knows this. This is why they're going to be looking at the jobs numbers. They want higher levels of unemployment. They want a weaker jobs market, technically. Why? Because that's going to be pivotal for bringing down aggregate demand to slow down the economy and bring inflation down. It's very unfortunate that there has to be pain, but it is what it is because it will help to avoid an even bigger issue. So that's why you have to watch these numbers. It will affect the entire stock market. Now, with President Joe Biden and McCarthy, as you know, they have a debt ceiling deal. In my video from yesterday, I talked about what Kevin McCarthy said. He was very optimistic, saying lots of good stuff. And he mentioned that 95% of the GOP members and the Republicans in the House and etc., they are most likely going to be in support of the deal that was coming. And that's important, right? Because now it's not just about Biden and McCarthy. Now it's going to be about Congress. What is Congress going to do? Are they going to vote on this? Are they going to just debate? That's going to be what's very important. The Treasury Secretary, Janet Yellen, said the new deadline is June 5th. So now we have a little bit more time, but she's still being very stern and strict about the implications of a potential default. Now, amidst all of this, President Joe Biden came out. And like I said before, I didn't get time to talk about what Biden said yesterday because Biden spoke very late last night, and that was way later than when I recorded the video. McCarthy said some positive things. Now I'm going to quote Joe Biden. Biden said, and I quote, "I just spoke with House Representative Speaker McCarthy, and we have a bipartisan budget agreement ready to go for Congress." Biden said that I urge both houses to pass the agreement. The agreement eliminates the worst case scenario, which would be a default. And he said basically, a bipartisan budget agreement has been made, and the debt agreement is excellent for the American people. Biden said we have to work together, and he once again reiterated the fact that there will not be a default. So, good news from Biden, technically, right? All of this is great. The market was loving this in the beginning as we approached the deal, approaching it. But the real question now is, will the market continue to pump, or will the market end up selling off now that the news is out? Could this be a buy the rumor, sell the news event? Well, it's very tricky and very ambiguous because here's the thing. The deal is technically not done yet. They have the deal between Biden and McCarthy. They did their part. Now it's up to Congress. So that's making this a little bit more tricky. And it depends on their interpretations, right? How the market's going to interpret all of that. There's a bullish case, which would be so far the market has been pumping so hard, the market's going to love the fact that the deal is out. That's a possibility. But the bearish case would be based off the implications of a deal. All right. And Seeking Alpha broke this down very efficiently. They mentioned that it may not bring a significant rally, the whole deal that just came out, because of concerns about an impending recession. They mentioned that the temporary relief from the debt ceiling deal for investors is expected to be short-lived because the stock market is about to lose its own fiscal support. They mentioned that this in turn is going to have a big influence on the Fed and their policies. I have another quote I'm going to read to you guys in just a minute. But the point I'm trying to make is there is a bearish case you could talk about. And here's the reason why. Going back to this quote I read right here, with the debt ceiling deal in place, Treasury issuance is set to increase significantly, leading to a more aggressive form of quantitative tightening by the Fed. So, because of this, because of the expansion in the debt ceiling, the Fed could be incentivized to be even more hawkish, especially because this is going to be accompanied by potentially higher levels of inflation. Now, that's just the bearish case, but this may not play out for a while, right? I just wanted to mention this because you have to be very open minded just in case. Now, in my honest opinion, I don't know exactly how this is going to play out, to be honest with you guys. And that's the reason why I secured all my profits on Friday. I'm primarily holding cash in my trading accounts, and I'm going to be watching how we respond to support and resistance. And based off that, I will be able to make a trade, enter an exit, or scalp if I have to. That's basically what my strategy is, playing it very, very short in a very volatile market. Now, here's the thing about Tesla. Okay, when you zoom out of the chart on the daily time frame, we've gotten rejected off the 200 EMA many times, right? You could see it right here. Tesla got rejected off this red line here back around February. We got a rejection. We touched it again around the end of March, got another rejection. Then we pushed again and we barely touched it again and we failed to break above it. Now, could that be bearish or could it be bullish? This is going to depend heavily on how the market's interpreting the situation. There's both a bullish and bearish case that you could be making right now. And I personally, I'm not 100% sure which one it's going to be because this is a very unique situation. The best way to go about this, okay, in a situation where you're not as confident, is to just be patient and watch how the chart plays out. And that's why it's so important to watch support and resistance levels. And let me explain. So if you're watching Tesla tomorrow, here's what you have to watch for. First off, we have to break above 195 as resistance. If we break it, then we have major resistance between 198 and 200. Why? Because that's between where the 200 moving average and the 200 EMA happen to be. So we have strong resistance here. Lots of sellers try to fight right about here. Lots of shorts pile in right here around this zone. This is going to be Tesla's major resistance if we do touch it. If Tesla, okay, breaks this supply zone, it is going to fly. If it breaks above 200, it's going to fly all the way up to 205, and then potentially 207 is going to be a stronger resistance. We have a gap all the way up there. We're going to go for the gap fill. If it breaks and holds 200, it's going to hit 205 to 207 quite quickly. But we have to hold 200 first. If it barely touches 200, then just rejects and starts coming down, then you have to watch 195, which is currently going to be resistance as Tesla's below it, but these resistance zones become support if we get above them as well. So there's 195 is a very important area. Then 192 is going to be somewhat important too, because this is where Tesla bounced previously, and this is a pretty decent support. 190 flat is going to be a little bit important. That's going to be my pivot point. Okay, 190 is very important. Tesla needs to hold above 190 for there to be a bigger advantage for the bulls. If Tesla chops around and breaks below 190, then I see an issue because we have the 50 EMA around this 187.8 area, and then we have this imbalance around 184.5 or very close to 184. So if 190 fails, okay, if 190 fails us, Tesla will most likely make its way all the way down to 184. So those are some very important levels to watch for, okay? If Tesla manages to hold these levels, depending on how it reacts to the dead ceiling alongside the whole market, if the market keeps pumping, Tesla could get a retest of this 198 to 200 area. Now, my gut tells me maybe the odds favor that, but I want to be very open-minded right now because I know we're reacting to this big piece of news, and there's many times where there are buy the rumor, sell the news events, and that's why you have to watch these levels. Very, very important stuff. Now, as far as SPY goes, here's the thing: we're at major resistance. 420 to 421 is major resistance on SPY. Okay, in order for us to turn really bullish from here, because we closed just at resistance. If you want to turn bullish, if we're going to get a bullish reaction from the dead ceiling news, a truly bullish reaction, we have to break and hold 421. If we achieve that, if you see SPY in the 421s and it does not like show much weakness, we see lots of algos buying, it's going to fly all the way up to this 425 to 426 area for another gap fill. If it could break and hold 421, if it holds 421, the odds favored making its way all the way up to 425 to 426. Okay, very, very nice move. Money could be made on that. Now, let's just say this truly is a buy the rumor, sell the news event. You know, the news came out, the market doesn't like it. The market starts to just sell off because it priced in everything already, hypothetically. If we reject off this 420 to 421 area, watch 418 to 417.5. It's a very important zone. We need to hold 417.5 to 418. It has to. If there's going to be more hope for the bulls, or like for the bulls to have the major advantage over the short term. Because if it fails, if we fail at 418 to 417.5, it's going to come down to this imbalance right here, all the way down to 415.4. So it's going to come down to the mid 410s or 415 if it fails at 417.5. And then if 415 fails us, it's going to make its way down to about the 412 area. If that fails us, 409 to 410 will come. So those are the very important levels to watch. The most important level, or at least the two most important levels, are 421 for the bulls, and for the bears, 417.5 to about 418. I would lean more towards like 418. Very important level. If it breaks below that, there's going to be more downside. If it holds this and starts bouncing, it could still push more. So watch these levels very carefully. Why am I not giving you guys like a perfect prediction like I've done? I'm not going to say I'm perfect, but like a more accurate prediction like I've done in the past is because I don't truly know right now. I don't truly know how this is going to play out. I'm just sitting on the sidelines. I'm just going to watch and then just scalp on the side. I'm going to be very patient for this. And sometimes you have to do this as a trader no matter how strong you are. Sometimes it's very important to do that, to be very patient. This is a game of patience. On the QQQ, this is looking very overextended with an 81.85 RSI. Super overextended, but you always have to remember what goes up could always go higher. Just look at Nvda, for example. So this is looking like it's due for a bit of a pullback. It is looking like this on the QQQ. It's looking more overextended than SPY and Tesla, but I'm always going to be open-minded just in case, okay? And here's what you have to watch for. Major resistance between 350 and 349 around here. We have some very strong resistance here. If we're bullish, it has to break 350. Break and hold 350, and this thing can fly to 355. Okay? If we fail to do so, if we fail to break this and we start downtrending, I'm going to be watching the mid 340s. 345 could get retested. This was where the top of this bar was right here, this very bullish break zone, and we could get a retest here. And then this 345.25 area is going to be very, very important, because if it fails to hold this, if 345 fails, look at this imbalance right here, right? Now, why do I keep talking about these imbalances? There's a big change in net flow in the price action. The algorithms, right? Because a lot of the market is not just humans. It's algos that are dictating price action, right? The hedge funds are using the algos. They start selling to balance the net flow. Why do they do that? Because that's how they reposition. The algos will take over. If we break below 345, the algos are going to take over and make us retest 340. So that's why you have to watch 345 in this case. Okay, so it's super, super important. All right, so that's going to be support. Resistance, excuse me, is going to be around 350. Watch these levels super carefully, and we will see how the market reacts. Same goes for NEO. If the market keeps pumping, NEO could make its way closer to $8. If it fails to do so, 7.5 could come. For the Nasdaq, 13,000 is going to be resistance. If it keeps breaking out, we could get to 13,250. If we fail to do so and we start coming down, right, we have this imbalance down here on the Nasdaq. 12,750 is going to be important before it does come down, if that ends up being the case. I'm sorry, 12,800 before 12,750. Just watch those carefully. Basically, what I said for the QQQ will translate into the Nasdaq. I just like to talk about the QQQ because I traded a lot more. SPX, same thing. There's a gap around this like 41.18 area, something like that. So it could pump a little bit more. I am leaning a little bit more bullish on it, but I'm also going to be very open-minded just in case. That's why I'm not really holding any positions. I'm not really trading like futures or anything like that right now. I'm just waiting for a nice scalp opportunity. I'm going to be very patient on this. Whatever I said about SPY will apply for SPX in a very similar manner, so don't forget about that. As far as the VIX goes, the VIX is not signaling any bounce just yet. It is testing this like support zone right about here, but could always come down. So there's nothing clear about it just yet. The dollar is up, which tends to be a red flag for the markets. If the dollar keeps pumping, that tends to be bearish. For now, it's been holding up quite nicely, so watch that carefully. And then I'm just going to zoom past some of these. Apple's major resistance is going to be 175. Break that, then 177.5 could come. The 175 to 176 zone is what I'm referring to. Break that, then 177.5 could come, and that could pump the market more. If Apple fails, okay, we have this huge imbalance at 173, and it is looking like it's going to get retested in the future. Apple, in my opinion, has been losing some momentum, so the odds do favor it cooling off a bit, but I'm always going to be open-minded just in case the news ends up resulting in positive price action. If Apple fails around 174.8, it's going to likely come all the way back down to 173.36, which is where the imbalance is, to about 172. So if Apple does drop a couple of dollars, that could slow down SPY in the QQQ, many different tickers out there. So just watch it very carefully, right? Watch this 175 zone, very important stuff. As far as Nvidia goes, I have this Fibonacci retracement for you guys. I mean, if we break 390 and hold it, if we manage to break and hold it, it could make its way into the mid 390s. If it fails to do so, the low of the day from this was basically tested a little bit earlier, but we could make our way even lower going forward as time progresses because we are going to be testing some major resistance around this 392 area. If it fails to hold, let's see, 388. If that fails where Nvidia is, Nvidia has potential to make its way all the way down even lower to about 383, then 380. Could even go lower than that. But just watch support very carefully around the mid 380s. And if 380 fails, then we have 375.2. So just watch those carefully on Nvidia. Like I told you guys before, I'm seeing this as a stock that's going to range trade for a bit, but it does have more upside coming for like the more medium term, maybe approaching the later months of this year. It is going to break the highs it made, most likely, in my opinion. It is not done. But for now, I am seeing some range trading. For Google, if we break and hold 127, we're going to make our way up to 130. If we fail to do so, okay, because there's a potential bullish triangle formation, if we fail to break 126 to 127, basically that zone right there, if we fail to break this and we reject from here, the next support is going to be around 123, followed by this imbalance around the 121.5 to about 120 area. Okay, make sure you watch that carefully. The 10-year Treasury yield is a little bit down. It did come down a little bit as the market pumps, and that's what typically should happen. There is this gap down here, which tells me there could be more room for the market as this thing starts to come down. There could be more room for the market to pump. I am still open-minded to that, but I have to watch for confirmation first, seeing how much we pumped already. I do think the odds favor that, though. I just want to let you guys know that, but I want to be very cautious at the same time because it's very important to manage risks nonetheless. For Amazon, watch 117.3 around the 117s. If that fails, it's going to make its way all the way down closer to 116 than to 114 if we fell all the way down there. If Amazon keeps pumping and breaks 121.5, it is going to make its way closer to the mid 120s. It'll have a lot of room to pump if we could get a big break. For now, it's looking very choppy, so it might start chopping around into these like low 120s. So be careful with it. Last but not least, Meta. Before I end the video, Meta is very, very strong. I mean, I've been talking about Meta for quite a while since this thing was in the 230s to 240s. I've been saying Meta has a nice setup. It's just continuing to pump. No signs of major weakness. It is a little bit overbought, so it needs to cool off just a bit. But I just want to let you guys know that it could still keep going depending on how the market reacts to the debt ceiling. In my opinion, if it's bullish, this thing could fly to 270 to 275. If we're bearish, you're going to be watching 262 followed by 255 and then 250. Watch 260. That's going to be the major support to look for. If that fails, we're going to make our way down to 255. If we hold 260 and keep pumping thanks to the debt ceiling, watch 265 as resistance. Break 265 and we're going to fly all the way up to 270 and 275. Those are the zones I'm watching for Meta. There is this imbalance down here though, so be very careful. Uh, be very open-minded, guys. I know I'm not giving you guys a great prediction for now about how I see this going on. I really don't truly know. I want to be very open-minded and be honest with everyone. I don't know exactly how this will play out, if we're going to get a huge pump first or if we're going to get the rug pull. I really just want to watch for confirmation. That's just how I feel comfortable. I don't want to like give you guys a guess because I'm not fully, convicted just based off technicals right now because we're going to react to a big piece of news. And sometimes that happens in the markets. Do we always do this? Not necessarily, right? We have these big events like FOMC and, like CPI and stuff. These things happen, and sometimes technicals alone are not going to solve everything. You have to be well aware of the macros. You have to be well aware of the market's interpretations of them. And you have to be well aware of what on earth, the algos could end up doing depending on certain levels to watch for. That's why I constantly talk about the levels. Levels are very important when trading. And sometimes it's important to just step aside, watch how it plays out, and then know your entries and exits. I will have a much better understanding of this market once I see how we open and once I see how we're moving. If we break and hold key support and resistance levels, it becomes easier to trade and etc. And once again, remain as open-minded as possible. All right, guys, so please have a great Memorial Day. Have an absolutely spectacular rest of the day. Remain calm, cool, and collected. And don't forget, I think I forgot to mention this. We had a good update from Tesla about the FSD braking systems and their wipers. The wipers are going to be a lot more advanced at wiping at certain speeds by sensing how much rain there is. So some awesome updates from Tesla, but I'm not going to go into too much detail. I want to make this video short for Memorial Day, so thank you all for listening. Have a great day. Tesla and the market to the moon as the long term is very bright, and peace out.